What if you could buy a new beginning? Not just a new house or a new car, but a new nationality, a new passport. In our increasingly connected and volatile world, for a growing number of the global elite, citizenship is no longer just a matter of birthright. It's a commodity for sale. Welcome to the multi-billion-dollar world of golden visas and golden passports, a global marketplace where countries openly sell residency and citizenship to the highest bidders. Proponents call it a brilliant tool for economic development, attracting billions in investment. Critics warn of a shadowy underworld facilitating corruption and eroding the very idea of national identity. Today, we're delving into this booming and controversial industry to uncover the price of a new beginning. The core idea behind these programs is simple. In exchange for a significant financial contribution, a foreign national gets a fast-track pass to either live in a country or become a full-fledged citizen. This isn't your standard immigration path. There are no years-long waits, language tests, or cultural integration classes. This is the express lane, reserved for those with capital. Over 60 countries around the world offer some form of what's known as investment migration. Let's break down the two main products on offer. First, you have the Golden Visa, which grants residency by investment, or RBI. Think of this as getting a foot in the door. It gives you the right to live, work, study, and access services like healthcare in a new country. For many investors, the main prize is mobility. A residency permit in a country like Greece or Portugal, for example, grants you visa-free travel throughout the European Union's Schengen area, a zone covering 27 countries. The price for this access varies wildly. In Greece, the program has historically been built on real estate. For a long time, a property purchase of just 250,000 euros was enough. However, facing a housing crisis fueled by this demand, Greece has recently hiked that minimum to as much as 800,000 euros in popular areas like Athens and Mykonos. Portugal's famous Golden Visa program, which has attracted over 7.5 billion euros since it started, is also undergoing a major pivot. As of 2025, you can no longer qualify by simply buying a house. The government, responding to social pressure over soaring property prices, has shifted the focus. Now, you need to invest at least 500,000 euros in investment funds, contribute 250,000 to cultural heritage, or create at least 10 local jobs. Spain, another popular destination, offers residency for a 500,000 euro real estate purchase, but it too is re-evaluating this path, with a potential stop to the real estate option slated for 2025. Then there are countries like Italy, which offers a 2-year residency permit for a 250,000 euro investment in a startup, or the United Arab Emirates, where the Golden Visa has been a massive driver of its booming Dubai real estate market. But a residency permit is one thing. The ultimate prize in this market is the Golden Passport, which offers full citizenship by investment, or CBI. This isn't just a right to live somewhere. It's a new nationality, a new passport, and all the rights that come with it. For many, a second passport is the ultimate insurance policy, a plan B for a world that feels increasingly unstable. These programs are rarer and, as you'd expect, more expensive. The most prominent players are often smaller nations. The Caribbean is the hotspot for CBI programs. St. Kitts and Nevis pioneered the entire concept back in 1984. Today, it offers citizenship for a minimum contribution of $250,000 to its National Development Fund. Other Caribbean nations like Dominica, Grenada, Antigua and Barbuda, and St. Lucia offer some of the most affordable and fastest options, with pathways to citizenship starting around the $100,000 to $240,000 mark. Grenada's passport is particularly interesting to some, as it can be a stepping stone to securing an E2 investor visa in the United States. In Europe, the options are far more limited and controversial. Malta is the only EU country with a well-established CBI program, but it comes with a hefty price tag, a contribution of up to 750,000 euros plus a significant property purchase or lease. The program is under intense fire from the European Commission. A newer major player on the scene is Turkey, which offers citizenship for a real estate purchase of at least $400,000, making it a very popular choice. So why are so many countries willing to sell what was once considered a sacred bond between a person and a state? The answer is almost always economic. These programs are a powerful source of foreign direct investment, and crucially, it's debt-free capital. For countries like Greece, Portugal, and Spain, which launched or expanded their golden visa programs in the wake of the 2008 financial crisis, this influx of cash was a lifeline. It helped prop up their battered real estate markets and shore up their economies. We already mentioned Portugal's program has generated over 7.5 billion euros. The economic benefits are seen across the board. Real estate is the most obvious beneficiary. The surge of foreign money drives up demand and prices, which can revitalize a stagnant market, as seen in Dubai. But the goal is often broader. When investment is channeled into businesses, it can create jobs for local citizens. This is why Portugal is now prioritizing this route. And the direct donations to government funds, especially in the small Caribbean island nations, can form a significant portion of the national budget, paying for everything from infrastructure projects to disaster relief. But despite the clear economic arguments, the world of golden visas is fraught with controversy. Critics see it not as a pragmatic tool, but as a dangerous commodification of citizenship that opens the door to a host of problems. The most serious concern is that these programs can be a gateway for corrupt officials, money launderers, and other criminals. They offer a perfect vehicle for individuals to escape justice in their home countries and secure a safe haven for their illicitly gained wealth. Organizations like Transparency International and the European Parliament have repeatedly warned that these schemes can act as a Trojan horse, allowing organized crime to infiltrate a country and, by extension, entire regions like the EU. These aren't just theoretical fears. The scandals are real and numerous. In 2020, an investigation known as the Cyprus Papers revealed that Cyprus had granted passports to dozens of high-risk individuals, including convicted criminals and politicians accused of corruption, through its now-defunct Citizenship program. Portugal's golden visa has been plagued by allegations of corruption and fraud, with one case involving a crime ring that issued thousands of fake residency permits. Even a government minister resigned over a scandal. Malta's program has faced years of intense scrutiny from the EU, which has pointed to a lack of transparency and weak due diligence in vetting applicants. These cases show that despite formal background checks, the sheer volume of money and applications can overwhelm systems and create opportunities for corruption. Beyond the security risks, there's a significant social and economic backlash in many host countries. The most common complaint is the impact on housing. The flood of foreign money into real estate has been directly blamed for driving property prices to levels that are simply unaffordable for local residents. This creates immense social tension and gentrification, which is precisely why countries like Portugal and Spain are rolling back their real estate-based visa options. Critics also argue that selling citizenship fundamentally devalues it, turning a relationship built on shared history and values into a simple transaction. It creates a two-tier system of immigration, a fast, easy path for the wealthy, and a long, difficult one for everyone else. And are the economic benefits really worth it? Some studies suggest they might be overstated. One analysis found that in Spain, golden visa contributions accounted for less than 0.1% of the country's GDP. In many EU countries, the revenue is no more than 0.3% of GDP. This raises a serious question. Do these marginal economic gains justify the soaring housing costs and security risks? Within the European Union, the pressure is mounting. The European Commission has taken a hard line, arguing that when one member state sells citizenship, it's effectively selling citizenship to the entire Union, granting the holder the right to live, work, and move freely across all 27 member nations. This has led to legal action against countries like Malta, with the Commission arguing their programs breach EU law. So who are the people buying these golden tickets? Their motivations are as diverse as their nationalities. For many, especially those from countries with restrictive passports, a second passport is a key to the world, opening up visa-free travel for business, leisure, and education. For others, it's about security. In a world of political instability and economic uncertainty, a second residency or citizenship is the ultimate insurance policy. It's a plan B for your family if things go wrong at home. Of course, there are also business and financial incentives, such as access to new markets or more favorable tax systems. And for many, the motivation is simply a better quality of life, access to world-class healthcare, a cleaner environment, or top-tier universities for their children. The main applicants have historically come from emerging economies like China and Russia. But recently, a new trend has emerged, a growing interest from citizens of developed nations, including a surprising number of Americans who are looking to diversify their options and hedge against their own domestic, political, and economic risks. The global market for investment migration is clearly at a crossroads. Demand is not going away. In an uncertain world, the desire for mobility and security is only growing stronger. However, the public and political backlash, especially in Europe, is forcing a major rethink. The trend seems to be shifting away from the passive, real estate models that have caused so much controversy. Countries are now pushing for investments that have a more direct and positive impact on the economy, like funding for innovative startups, scientific research, or job creation. We're seeing a push for greater transparency, much stricter background checks, and more cooperation between nations to mitigate the risks. The era of easily buying a European passport might be drawing to a close. The golden door isn't closing entirely, but the price of entry is going up, and the path to walk through it is becoming more regulated and selective. The global debate over what citizenship means and what its price should be is far from over.